focus in the bear markets. If you go out of touch within bearish markets, then you're not actually trading or investing to make money. You're trading or investing for a thrill. You're doing it for the emotion. If you only like crypto, if you're only interested in Bitcoin when it's pumping, then you're not actually in the market to make money. You're in the market to feel something. You want to feel the thrill. But that means you're being led by emotion, not logic. Now, next thing, how do you actually do it? How do you buy it? The very simplest thing is dollar cost averaging. Dollar cost averaging is super simple. You take a fixed amount every month and you just put it in. So let's say you get paid every month and you have $500 left over that you want to put into Bitcoin. You just, on the first of the month, when you get your wage or your salary or the last day of the month, whatever, you just put it all into Bitcoin at the day, right away, just put it in and you go off. You don't care if it's up, you don't care if it's down, you don't care if it's sideways. The point of dollar cost averaging is that some months you'll buy at the bottom, some months you'll buy at the top, some months you'll buy in the middle, and over time it averages out. And as long as the market rises, like the stock market does, or like Bitcoin does over a long time frame, you will come out ahead. That's standard DCA. So if you don't know anything else to do, just do that. Start from there. Now, because you're in this campus, one of the things that you should do when you get past white belt and you're building all your systems is you should go and build a long-term, high time frame system. So you should look at a weekly chart or a daily chart or a 3-day chart or a monthly chart and focus on, okay, if I get paid every month, and this is my plan for the next 10 years, I'm going to get paid every month. I'm going to put a percentage of it, whatever my excess, whatever is left over each month, I'm going to put 70% of it into Bitcoin, right? The excess, you've paid your bills, you've paid your rent, you've got all your side money. This is your excess. Then, instead of just DCA, can I improve that? And this is something that makes a small difference in the short term and a huge difference in the long term. So, you implement simple rules. And each of these rules I've mentioned, go test them. Think of other rules. Don't dollar cost average above the all-time high unless it's 20% off the highs in year 4. So this one's relevant for now. In crypto, in a bull market, the best time to DCA, and DCA just at any time, right? So every month you just buy Bitcoin, is when it's below the previous cycle highs. So that's like here. Your goal in a crypto market would be the dollar cost average every month here. So whenever it comes down and anywhere below the previous cycle highs over here, let me see this, there, right? Anytime in this area here, when it's below this level, all of that, right up to all of this, till we broke out, your goal in all of this is to just buy Bitcoin, okay? Every month, you just buy some Bitcoin. Your only rule you implement then is when it goes above the all-time high, you don't buy. So let's say you get paid today and Bitcoin's already broken out, it's above the high. You don't buy with that. You put that on the side. So you just leave it in cash. And you buy anytime it goes down 20% from the recent high. So if you go back and you look at this from the last cycle, it would mean that your dollar cost averaging looks something like this. So going over here, and you're looking at the market as it goes up. So when it breaks out and it's at new all-time highs, now you've DCA'd all the way here, you've DCA'd all the way here. Then it breaks out, you stop DCAing because it's at all-time high. It's in price discovery. And you wait for a 20%, any 20% correction. That's 9%, so you don't buy there. So if you got paid anywhere over here, you don't put it in. You wait, 20%, there. It went down 20%, you buy there. So the money you would have stacked here in December and here in January, if you had got any income there, you would not put it in then, you would wait for 20% correction. And each time you're just marking the most recent high, and when it goes down 20% again, there you go. Now you start DCAing. So let's say you got paid in January, you would DCA there. And if you get paid again a month later, and we're still below that 20%, you DCA there. And so on and so on and so on. That's not the only rule, that's not the only way to do it. That is just a simple logic. The logic behind that is, you don't want to be putting, the higher the bull market goes, you don't want to be adding into it unless you're seeing a bit of a discount, unless you're seeing some kind of correction. And then when it's below all-time high, you just DCA. Because again, what's your assumption? This is long-term. Your long-term approach is Bitcoin is going to go to new highs. It's always going to go to new highs over the next 10 years. It might take a year, it might be faster, it might be slower. But if I'm below previous all-time highs, below the previous cycle highs, then I just buy. I just DCA. Always DCF below previous all-time highs, super cycle theory, same thing, right? And third, you can double or triple your DCA if you're near a 50 or 100 month EMA. So when you have these real deep discounts, you can increase the amount you're putting in. So the idea of this would be either you've got cash that's stacked on the side, or, you know, let's say like you've got savings as well. So when we're talking about dollar cost averaging, it's not every single penny you get every month goes in automatically. It's I take a percentage of my monthly income and I put it into Bitcoin. So you still have some left over, and you probably still have some savings, and you probably still have some rainy day fund or whatever. And if you ever see that Bitcoin goes to these 50 and 100 moving averages, this is where you aggressively buy. So maybe you work overtime, or you get as much cash in as you can, or you dip into your savings and you add more into Bitcoin when it's at these extreme discounts each month, because you know that that's the absolute screaming buy opportunity. And of course, we're nowhere near that right now. It's going to be many months, if not years, before it gets there. So when it gets there, that's your time to absolutely load up, you know, fucking stock the boats and sit back and just let the market do its thing. Now, when to sell? So for Bitcoin, just like anything, sell into mania, sell into euphoria, but never sell all of it. And this is based on psychology. So the actual tactics of how to sell will be on tomorrow's part. We'll talk about the bull market cycles, and it's more of a short-term thing. But never sell all of your Bitcoin, like I just said. Until you no longer believe that the best thing to do is to own assets, then you should never sell all your Bitcoin. So again, let's just play this out. When would it be a good time to not own assets? Go and ask any rich person you know, what do they have? Do you think that billionaires have $1 billion of cash in their bank account? No. They have a net worth. They have companies, they have real estate, they have investments, they have bonds, they have stocks, they have some cash that all totaled and added up makes them a billionaire. The vast majority of it is in assets. So the only time you should consider selling like all your Bitcoin is if you have a strong reason to believe that there is another asset class that you want to be in. Let's say maybe you want to go all into real estate when you've got loads more money and you just don't want to go into Bitcoin anymore. Okay. Maybe you want to do it in stocks. Okay. But assets. Never sell all of your assets. Right? Never. Never sell all of them. So even when the bull market goes peak retard, don't sell all of your assets, because you don't know what's actually going to happen. You don't know there's going to be an 80% correction on Bitcoin, or a 70 or a 60 or a 50. You don't actually know. Maybe Bitcoin supercycle means there's 30 or 40% corrections. And instead of going down a lot, it goes sideways a lot. And you're left sidelined waiting for this deeper correction that never comes. Psychology-wise, have a portion of it you never sell until you believe there's another asset that is better to buy. That's different to saying the bull market's over and I want to be in cash. It's completely fine for your trading portfolio, right? The portion of your net worth that is for trading is completely fine to say, okay, my systems tell me bull market top is in. I don't want to be exposed to crypto in a bear market. Therefore, I'm going to sell my altcoins. I'm going to sell my Bitcoin from my trading portfolio. The 20%, the 30%, whatever portion of that is. And then the idea of that is you're trying to DCA that into Bitcoin again. And you're trying to keep money coming in so that whenever the market turns upwards again, you're ready to get on the long train. Alts, this is especially true now. You should be religiously taking profit into cash or into Bitcoin. Don't fall for the hype. It's not early. It's not late, but it's certainly not early. Right now, in this bull market, this market cycle, we can't be early because it's a year after the proper bull market began, if you say October 2023, and it's 2 years from the bottom, if you take the FTX collapse. So the people that did stick around, the people that bought all the capitulation, the people that bought those lows, they're in massive profit and they're going to be taking profit over the next year. Make no mistake about this. The people who are playing cycle by cycle basis, who bought 15K, 20K, 30K Bitcoin, who bought $10 Solana, who bought $800 Ethereum, who bought Dogecoin at whatever, 5 cents, These people are going to be aiming to take profit over the next year, as the late people, the people who don't stick around the bull market or bear market, the people who are brand new, who don't understand all of this, they're going to be dumping slowly on the heads of the people who come in thinking, oh, I'm going to buy Dogecoin for the next 3 years because Elon Musk and Vivek and the Department of Government Efficiency. No, that's a good narrative for a year. That is not going to sustain a coin going up forever. Nothing will. There's always going to be cycles. They may not look the same. The cycles happen because market psychology never changes. The feelings, as you see on the Wall Street cheat sheet, that never disappears. We always go from capitulation, anger and depression up to belief, thrill and euphoria. We always do it. The chart doesn't always look like that chart, but we always have those psychology cycles because markets always fluctuate from oversold to overbought. If they didn't, then everything would just go sideways, or it would rise diagonally, but in a straight line, like a linear rise, which we know doesn't happen because people get overly excited on the way up, they get overly depressed on the way down, and that's why cycles continue to happen and will always happen. Always. That's never going to disappear. Nothing can make that disappear because it's just how markets move. They trend and then they mean revert. So remember, again, if you believe like I believe and you don't believe that for some reason something's going to beat Bitcoin in crypto, it's not to say that there's not going to be a better asset than Bitcoin in the future for long term. But if you believe that Bitcoin is the best crypto asset for 10 years, right? And just this very simple, ask yourself, if you had to, if you were going into a coma for 10 years or you're getting locked up in jail for 10 years and you had to put all your money into an asset and it was crypto, which would you buy? The answer is simple. It would be Bitcoin. If it's anything other than Bitcoin, you're not thinking probabilistically. It's not about which could go up the most in 10 years while I'm away. It's which one is going to be here in 10 years when I get out. Number one. So, with alts, and you have to understand this is what every single person, every trader, every investor, every dev, every whale, every institution, every one of my friends who've been playing crypto for years, all my richest friends, everybody I know who's in crypto, every single one of us all agrees that altcoins are a way to make money. And for the vast majority of us, it's a way to get more Bitcoin. Some people just want to get more dollars, more cash to buy other stuff, real estate, other investments. But for every single person who plays these markets, the smart money, the goal of altcoins or NFTs or anything that is purporting to be something different than Bitcoin, the goal of it is to make money out of it and then put it into another asset that is the long-term asset. So don't fall for the hype. Believe in it. This is the thing. You have to believe in the bull market. You have to get on board. You have to not be afraid to take some risk. You have to be able to expose yourself to the market to get returns. But don't fall for the hype of thinking that this is an endless super cycle of meme coins forever. And your goal is not to catch every percentage of every move. This is super important. You're going to sell something, right? And then it's going to keep going up. That's fine. If you buy and sell based on a plan, your altcoin, if you get in at 5 and you get out at 50 and you make a 10x and then it goes to 100, don't beat yourself up over it. If you get in at 5 and got out at 50, you got a 10x. If it then went to 100, you're like, oh, I could have had a 20x. Well, no, you could have had another double. But you got a 10x and you got out. And it's probably going to go then from 100 back down to 5. The goal is not to get in at the bottom or at the top. The goal is to make more than you put in and get out, realize it into profits and put it into a better asset long term. Once you sell an alt, it's okay to never think about it again. Do not attach yourself to coins unless it's Bitcoin, right? And you have this. This is like, again, there's a lot of sort of paradoxes or contrarian thinking you need to have. If you want to tie yourself into something long term and you want to have a almost delusional belief in something, it would be Bitcoin for the long term. Not like, oh, it's going to 500k before Christmas. No, it's going to $1 million next 10 years. And that's my strongly held belief, and I'm going to stick with that until there's some major invalidation of it. But for everything else, for any altcoin, if you're just trading it based on a thesis, based on a process, based on a plan, and you then sell it, it is okay, and it's actually preferable to just avoid it then. Because if you bought something and then sold it, you have in your brain this mental log of your previous position. Sometimes that's a good feeling if you made money. Sometimes that's a bad feeling. If you've bought a coin in the past and you lost money on it, you don't need to trade it again. Psychology is very real in this sense. You don't have to trade it again. And consider a 20 or 30% cash position to buy capitulations. Test system. Now, this would be something like if you have conditions like we have now, where we've clearly broken out of all-time high. So if you're at the point where you would not be DCAing, like right now, let's say you're waiting and you wouldn't dollar cost average here because it's well above previous all-time highs and it hasn't had a strong correction yet, that is also potentially a reason why you would want to have some cash on the sidelines. So you might not want to have all your money in coins because you might be waiting for a capitulation, a leverage shakeout, a flush out, whatever. Because by the dip, especially at this period, phase 2, if we're going to have, let's assume we're going to have another year of bull market. Goes to the end of next year. That would be perfectly in line with the 4-year cycle. Let's just assume. It's not going to go up for the next year, right? There are going to be multiple dips and shakeouts. So if you look at the market and it's at all-time highs and everything else is pumping and you think there's a year left, it's fine to have some on the sidelines because there's going to be a correction. Now, like I said at the start of the stream, maybe it goes higher first and then corrects. That's fine. The approach is still to buy on the corrections, buy the dip. Most people only realize this too late. Most people started to talk about buying the dip in October 2021, and so they bought every dip all the way down. Buying the dip is absolutely correct if you're at the right part of a cycle, or if you have a long-term approach like Bitcoin, but that's just DCAing, right? And then don't confuse time frames. I've seen this so often. As a trader, you're going to build and test systems that can be on a low time frame, a mid time frame, or a high time frame. Do not let anything get in the way of your higher time frame plan with your buying of assets and accumulating them long term. Do not look at a 1-day chart or a 4-hour chart or a break of structure or the moving averages crossing on a low time frame and think, I need to sell all my Bitcoin. No, you don't. And never, ever, 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 and I want to pause here, ever, never sell to buy back lower. Never. Never sell for that reason. I have literally never heard somebody come into my DMs or tag me and say, Michael, I sold to buy back lower and it worked really well. Probably 3 or 4 times a week, I speak to somebody who said, Michael, I fucked up. I sold my coins to try and buy them back lower and it went wrong. And I ask them why, and they explain it, and it's always the same. It's because you didn't sell for a plan, to a plan, or for a process. You saw it going down and you panicked and you thought this is going to go down way more. So you see Bitcoin like it did the other day, right? And why do you think markets bounce like this? You see Bitcoin here, right? It breaks out. You're super happy here. Everything's great here. Life's amazing here. And then it drops to here. And you're like, oh my God, it's going to go lower. It went from 93 to 88. It's going to 83. I need to sell here and buy it back here. And then what happens is it doesn't go there. It doesn't work because you're not trading based on logic, you're trading based on emotion. So don't confuse your time frames. It's completely fine for the market to pull back. That's how it works. Even if you look at Bitcoin from a cycle by cycle basis, every cycle has been a higher low. So even when Bitcoin's gone down 90%, 80% and 70%, it has still just been a higher low cycle over cycle. Finally, for this part, then we get into tomorrow's. There's a paradox of crypto market. You should assume the 4-year cycle will repeat because it hasn't broken. That would mean we are in phase 2. That would mean we've got about a year left. That would mean that next year is going to be the biggest returns. So this year, end of this year, and all of 2025 is going to be the biggest returns. It's also going to have the most volatility. So you have the biggest corrections, the biggest leverage flushes, and the biggest shakeouts. But you also have the biggest pumps. One comes with the other. It's cause and effect. If something can go up 10x, it can go down 90%. If something can pump 2x in a day, it can drop 30% in a single wick. And especially as we get into this period now, where most people are coming in late, right? If you're not already in from last year, they're going to be coming in late. Late does not mean too late. It just means you're not early. And the later people are going to end up panicking because they buy at the top and there's a 20% dip and they sell, and then it rips higher and they get caught into this cycle of selling the lows and buying the highs. So if you assume the 4-year cycle is going to repeat, you play it in that way. This year is going to have the biggest returns. It's also going to have the most volatility. And until that cycle breaks, you expect it to keep going. Now, the biggest risk in any market is believing that the past will always repeat. And this is where the paradox comes in. You have to believe in the 4-year cycle because it has not been invalidated. You have to also be attentive to the idea that it may not continue to play out. So how do you track this? You look at what's actually happening. 4-year cycle. We don't break the all-time high before the halving. This cycle, we didn't break it. We touched it. We false break out. Right? 4-year cycle. We break out in Q4 of the halving year. 6 months after the halving. What are we doing this year? Q4, we're in it. Halving year, we're in it. 6 months for halving, yes. And we broke out. Okay, so right now, Bitcoin is following the 4-year cycle perfectly. So, expect that to continue until it doesn't. Just be aware that it can break. Don't predict it to break. Don't psyop yourself and say, I need to sell everything now because this looks like a top. Well, no, it's far more likely that the 4-year cycle is self-fulfilling to an extent, because it also aligns with a liquidity cycle, it also aligns with an election cycle, it also aligns with many other cycles that happen in the stock market and in regular markets, and that the smart money are more likely than not to be buying any dips here, buying any corrections, because they can see a 12-month runway. That means it's good to buy. Now, if we get into September of next year, those same people are not going to be buying aggressively on dips, because buying aggressively on dips at the very, very end of a potential 4-year cycle is not a good idea. So the reason why the market's so strong right now, the reason why the market is dips are getting eaten up and bought up, the reason why we had a huge breakout is because the cycle is playing out as expected. So people are not willing to sell because they believe there's another year left, and people are willing to buy because they believe there's another year left. So ride that until it's invalidated. We won't know that until obviously a year has passed. But again, keep doing what works until it stops working. And the reason, again, why this continues to play out is that one thing will always repeat are psychology cycles. Just like the cheat sheet here, we will always go from anger, depression, all the way up to euphoria. If I had to guess, we are somewhere, again, in the latter third of that. So we're at the start of the last third, right? We've gone through the recovery, we've gone through the first phase, and we're in the second phase of the bullish market, which means we have one, if not two big legs more. And of course, altcoins go crazy within that, with volatility, but we have not got euphoria. I am very confident saying that. That does not mean we can't dip, but we have not got euphoria or thrill even, or mania. None of the signs are there. I'll talk about the signs tomorrow, but none of the signs are there. One of the key things with that is people are very confidently talking about pullbacks. It just doesn't happen in euphoria. I know it seems crazy, but it will happen to almost everybody that you will start to think, for some reason, somehow, this is different. Something will happen that makes you believe that this time is different. And that hasn't happened yet. In fact, people are trying to say, they're trying to fight the 4-year cycle. They're trying to say this breakout is somehow fake, even though it's exactly the time it should break out, even though it's exactly the period it should be breaking out to, and it's exactly the magnitude of the breakout we should have. Bitcoin's doing exactly what it should be doing, and yet people are saying, no, I don't believe it. It's like, well, the market doesn't care what you believe. So, that is how to win long term in the market, and tomorrow, on the second part, I will show you how to play the shorter term, the next year, or however long is left of the bull market, how to maximize returns while minimizing risk. You know, you can't win if you don't play, so you have to put some in, you have to take risk. It's totally fine to take risk. You must manage risk. And that's it. GM, thank you for joining. No questions today because it's a long one, so that's the stream. All good, all done. Thank you all. And this will be added to the Learning Center. This one won't be deleted, by the way. This one's staying up. This isn't a weekend workshop just for the weekend. This one is going to stay up indefinitely, so you can refer back to it, because it's something that's going to be relevant for a long time. Start to build your plans for long-term approach, and then tomorrow we'll talk about the short term. Thanks for joining. GM. Talk soon.
I'm Michael G. Trading game strong, schooling all the wannabes.